Hi students. Today we have to discuss one important concept which we call matching principle. As per matching principle, expenses must be recorded in the same period in which it is generating the benefit for us. So we'll try to understand this concept through different examples. So if you go to the simple definition which we have here, is saying it's mainly associating with cause and effect. The word cause and effect we use say expenses must be recorded in the same period in which it is generating the benefit for us. We can take the example of revenue side first, then we can go to some other things. Like here, we have example. He's saying there is a relationship between cost of goods sold and the revenue. We record the cost of goods sold in the same period in which we are recording the revenue. So this is one of the example of matching concept. Let us take example. See, when you bought the inventory, your first accounting entry is this: inventory debit and accounts payable credit. So here inventory is your current asset and this is your current liability. So you will not record it as expense till the time you make the sale of this inventory. So when you are making the sale of this inventory, you will pass this accounting entry, account receivable debit and sale credit. Other side, cost of goods sold debit and inventory credit. So this accounting entry, you are recording to follow the matching principle because against this expense, you are recognizing the revenue in this period. So any expense related to this revenue must be recorded in this period itself, correct? We can have few more examples related to matching concept. Students, in accounting, we are recording different kind of provisions. If we generally define the provision, setting an amount aside for future liability, like we already discussed in our other lectures, provision for bad debts, provision for warranty, provision for sales returns, provision for employee benefits. All these provisions we are recording just to follow the matching concept. Says you did the sale in this period. Say this is the accounting entry to record the sales, account receivable debit, and sale credit. All right. So any expected bad debts related to this credit sales, we will record in the same period. Provision for bad debts. Actually, when you are passing this accounting entry in the same period in which you recognize the revenue, you are following the matching concept. If you don't go for this one, what will happen? What are the complexities which we can follow? We will not be able to compare the financial statements. Say you did the sales in the month of Jan and you did not pass the entry for the expected amount of bad debts. Say in the month of August, you came to know that this much amount will not be recoverable. So if you did not keep the provision, what will happen? You will recognize the expense in the month of August, bad debts expense. While this is against the sale of Jan. So here you can see that expense is related to the month of Jan. Unnecessarily, you will have to record in the month of August. Say in Jan month, you have 1 million sales. In August month, you have also 1 million sales. But the bottom line will not be same because unnecessarily you are recording the expenses of another period to August. So to keep the financial statements comparable, it's the right practice to recognize the expenses in the same period in which it is generating the benefit for us. So this is the main understanding of matching principle. It makes sure that we are recognizing all the expenses incurred during the period against which we generated the benefit. We can have one more example. See, as per the labor laws, each employee entitled to receive the employee benefits, say gratuity is one of the employee benefit which employee is entitled to receive. So every month we pass this entry, gratuity expense debit and provision for gratuity credit. So when I'm passing this entry, again, I am following the matching principle. See, you are one of the employee of company. Once you will complete this month for working, anyway, company will pay you the salary in the same month or at the start of next month. But this is something which company has to pay when you will leave the company. This is your end of service. So every month you have the entitlement. It is getting due as per your service. So it must be recorded in the same month in which you work for the company. You provided the services to the company. You created the benefit for the company. So any related expense must be recorded in the same period. That's actually the simple requirement of matching principle. It makes our life easy. Like we will be able to record our expenses on time, and at the same time, we will remain aware about our liabilities as well. Take an example. In case a company not recording this accounting entry every month, what will happen? This company understating their liabilities, and at the same time this company understating their expenses as well. Say an employee will resign after 8 years and his total gratuity, let's take an example, 25,000. We don't have any provision for this one. So what will happen? Say he is leaving in the month of August. So the whole amount will have to record in the month of August. Unnecessarily, August month expenses will go on higher side. And you are not having any planning for this cash flow. Because if it is showing in your liabilities, there is a possibility you will do the planning for the payments. So there are so many benefits. Like when you dig out the issue, at the end, it sort out so many problems for us. So different kind of provisions like provision for bad debts, provision for warranty, provision for sales return, this employee benefits provisions, all of them we are recording just to follow the matching concept, which says that expenses must be recorded in the same period in which it is generating the benefit for us. So it's one last example I will give you for your clarity purpose. Let's talk about the prepaid expenses. If you will go for the allocation of prepaid expenses, we are actually following the matching concept. Say this year, during the year of 2022, 1st of November, say you paid the total rent amount 120,000 for next year. So what will be the initial accounting entry? You will say prepaid rent debit and bank credit. This is your first accounting. All right. Now you notice that here I recorded it as an asset because it is unutilized amount. I have to use it in the future. So now every month when we will utilize this rent on monthly basis, we will pass this entry rent expense debit and prepaid rent credit 10,000. I wrote it 10K. So here, when I'm passing this entry on monthly basis, I am actually following the matching concept. because I am utilizing this particular resource on monthly basis. Say it's the office of rent or factory, I'm utilizing it on monthly basis. So based on that utilization, I am recognizing the expense every month. So this is the simple rule of matching principle. I hope that this video will be helpful. Thank you very much.